It looks like we're skirting a recession, perhaps not in a recession, but very, very close. Let's back up and look at some of the backdrop. So when you look outside the U.S., with a couple of exceptions would be Vietnam, Burma, India, countries that are actually benefiting from the trade war between the United States and China. The rest of the world does not look that good. Inside the United States, we've actually held up pretty well. There are some things that are of concern, and unfortunately have become of more concern as time has come by. The auto industry has continued to slow. In fact, there is some pushback from dealers about the 2020 model year because they can't take as much because they're still sitting with cars that are, in this case, 3 years old. So we're seeing continued slowdown in auto demand. We talked about cardboard. A great deal of what we consume on a day-to-day basis, from cleaning supplies to food, is often delivered to our front door in little boxes. Well, if cardboard demand's going down, that means there's less little boxes. Last time we talked about a flattening or inverted yield curve. When I came in this morning and I looked at the markets, the 1-month Treasury bond yields 2.06. The 30-year Treasury bond yields 2.06. What that tells you is the bond market, as predicting future growth, is flat or inverted out to 30 years. When we just look at those three things, what we see is the slowdown is continuing. The bond market is predicting much slower growth here in the United States. When we look at other things that are beginning to pile onto it, consumer discretionary demand, these are things like washing machines, refrigerators, those types of things. That demand is diminishing. Look at RVs. RV demand has dropped precipitously. Recently there was an article in the Wall Street Journal that showed that the last 3 times we saw a drop off in RV demand like this, the U.S. in fact did go into or was into a recession. Right now, we say that we're skirting very close to a recession. There are some things out there that could likely change things. There is a lot of pressure on the Federal Reserve to lower interest rates. As I said earlier, right now, short term, if you will, money market funds, interest rates are around 2%. If you look at the futures market, they're basically predicting that interest rates go from 2% down to 1%. So a 100 basis point or 1% decline in the Fed funds rate over the next several months, let's say less than a year, perhaps by year end. And there's now talk out of Washington about tax cuts or a payroll tax holiday. These are not things that are discussed in a robust or growing economy. These are things that are discussed when people are concerned that growth is slowing and they need to do something proactively to boost it up. As you know, we have a very large gold position. We have a large position in Treasury bonds, and we have a large position in cash. Let's talk about each one of those and the opportunities that they create today. Gold is unique in the world. Gold acts as a store of value and has for thousands of years. Gold tends to rise in value during periods of volatility. It tends to rise in value during inflationary periods, and it tends to rise in value during disinflationary periods, that is when prices are coming down. I like to joke that gold is what Bitcoin wants to be when it grows up. So right now, when you look at our gold position, we're seeing prices decline pretty much across the globe. This is creating a small disinflation environment, which is very, very good for gold. So we're seeing gold up about 20% so far this year. When we look at treasuries, $17 trillion worth of sovereign debt is yielding negative rates. That is, you have to pay someone to lend them your money. It's nuts. Treasuries are, if you will, a port in a storm in a world that is in great pain. Cash is just pure buying opportunity. And when we look forward, let's say over the next several months through this market environment that we're in right now, we think we're going to have tremendous buying opportunity. And we're already seeing that as many companies, many great companies in industries that we're excited about come down in price. So there's 2 areas that we think that stand out particularly going forward. One is the build out of 5G and how 5G will change industries both here in the United States and around the globe. We think this could be one of the most technological, exciting revolutions we've seen, and the opportunities are going to be incredible. Right now, many of the leading companies in this space, in semiconductors, in building out 5G equipment, in creating the environment so that this 5G infrastructure can work, are under a great deal of pressure. And so we view that as an opportunity. The other opportunity that we have is the millennial generation. There are 84 million millennials in the United States. The United States is unique. We're the only developed country in the world with a rising, well-educated, large entrepreneurial cohort coming into their own. We are seeing millennials create families, buy homes, begin to do all those things that every generation did before them, but they represent essentially a third, or just under a third, of our entire population. This is a huge buying demand for things such as baby supplies, makeup, home purchases, future demand for washers, dryers, those types of things. Europe doesn't have this. China doesn't have this. The United States has this. So when we look out into the future, we see an opportunity in taking advantage of rising, or if you will, emerging technology in the 5G space. And we also look at an environment where the U.S. economy is going to be supported and boosted by a rising demographic of large, entrepreneurial, well-educated, motivated individuals.